The Personal Finance Executive Summary, October 9th, 2013. Welcome to Personal Finance. Market Watch. The Federal Reserve's recent decision to continue its bond buying program strengthens the case for financial assets. Since May, bond yields had jumped largely on the mistaken belief the Fed would start to taper its quantitative easing. But the Fed confirmed the obvious. Economic growth continues to fall short of expectations. Stocks surged during the summer despite rising bond yields. With the Fed now concerned enough about the economy to delay tapering, interest rates are less likely to rise in the near term. If yields continue to fall back, it increases the probability that stocks will spring ahead some more, despite such walls of worry as dysfunctional Washington, D.C. politics, modest corporate earnings growth, and frequent seasonal weakness in October.
The Fed's recent decision is fueling a bond market price rebound, with yields declining again. In the long run, stocks thrive on low bond yields. It's fair to ask whether stocks are undervalued, overvalued, or somewhere in between. We think it's the latter. The bull market won't end as long as there is easy money and not too many investors.
Assets in safe but return-free money market funds recently hit a 7-month high. Most of that money came out of bonds. But all of the cash on the sidelines in a year of significant stock market gains indicates a continuing lack of euphoria. Meanwhile, a slowly improving economy and low bond yields suggest that high-quality stocks should continue to attract new money.
Our advice for conservative investors still stands: 60% in stocks, 20% in bonds, with new purchases when 10-year Treasury issues pay 2.8% or more, and 20% in cash.
This issue's lead article is Hitching a Ride on the Recovery. We'd like to highlight 4 transportation stocks that will benefit from the recovery, but will use their competitive advantages and pricing flexibility to offer protection against downturns. Wabash National is a leading manufacturer of semi-truck trailers. With a market cap of $726 million, Wabash designs, manufactures, and markets transportation products in North America. The company's core business is standard and customized semi-truck trailers. It also makes equipment that's intermodal, which is containerized freight that can travel via truck, rail, or ship. The U.S. Department of Transportation projects that trucks will carry 36.6% of the country's freight by 2020, up from 33% in 2001, representing the biggest gain among all freight transportation options. Wabash National is a buy up to $13. We'd also like to tell you about FleetCor Technologies. FleetCor is the world's leading provider of fleet cards. The fleet card, sometimes called a fuel card, is used to pay for gasoline, diesel, and other fuels at gas stations. Fleet cards are also used to pay for vehicle maintenance and expenses. Since fleet cards eliminate the need to carry cash, they increase safety for drivers and prevent fraudulent transactions. FleetCor's core product is a special-purpose business charge card for the commercial fuel industry. About 90% of the company's revenue derives from the sale of these cards. FleetCor is reasonably priced compared to its growth prospects and is a buy up to $117. We also cover Expeditors International of Washington and Union Pacific in the issue. Our best buy for this issue is Seadrill. Seadrill is the largest offshore contract driller, with a growing portfolio of roughly 67 rigs. As oil and gas production booms around the world, Seadrill is increasingly the go-to oil services provider, especially in remote regions where prolific new energy finds are coming to the fore. The company now sits on a backlog worth $19 billion, a robust figure that management expects to grow as the company generates new rig contracts. Seadrill's construction program currently consists of 22 units, with 27 total units on order. With strong quarterly earnings, the firm announced it would raise its quarterly dividend by 3 cents to 91 cents and expects further increases predicated on an improving bottom line. Seadrill is a buy up to $45. And now for On the Money, where we cover ways that you can bring good financial sense to your everyday life. Foiling cyber thieves. These steps can keep you safe from the rising incidents of identity theft. According to the Federal Trade Commission's Consumer Sentinel Network database, from 2012, identity theft was at the top of the list of consumer complaints that year. Try these 5 proven tips to minimize the threat of identity theft. Number 1. Don't offer your personal data to strangers. Banks, credit card companies, and the U.S. government all have policies against calling or emailing and asking for your social security and credit card account numbers. Number 2, watch out for offline mishaps. Here's a fact that may surprise you. Old-fashioned offline methods, including burglary, stolen wallets, and purse snatchings, lead to most financial fraud crimes. Travelers Insurance recently reported that it's not online or mobile devices that fuel most fraud cases. Offline crimes account for 73% of all fraud cases, whereas online crimes were only 15% of these cases. You should always check your monthly bank and credit card statements. Number 3, check your credit score. Always know your credit score. Sudden changes to your score are a red flag that something could be wrong. Number 4, be vigilant online. Email identity theft, also known as phishing, recently rose 59%. Financial losses from phishing scams cost consumers $1.5 billion in 2012, up 22% from the year before. Keep this in the back of your mind before opening suspicious emails. Number 5, don't sit on a data breach. If you've been victimized by identity theft, get going and tackle the issue. Justin Urek, president of Denver-based IDWatchdog.com, says, oftentimes thieves will use your credit card data to commit non-financial identity theft crimes, which become much larger problems. This includes your employment and your medical benefits. Actively guarding your personal information is the key to protecting your good name and your finances. As a play on the growing phenomenon of identity theft, we recommend Cisco Systems, the pioneer in protecting individuals and organizations from digital incursion. Cisco commands 45% of the global market for cybersecurity, making it the biggest company in the field. Cisco is a buy, up to $24. Read more about this and other topics in your current issue of Personal Finance. There's also a lot more happening here at Investing Daily, especially in Canada. You already know a bit about Canada from the personal finance portfolio, like the 170% total return from Canadian apartment properties and our 75% total return from Vermilion Energy. But we have dozens more like this in our special Canadian advisory, Canadian Edge. They include 408% in 5 years in Canadian construction, 114% in 7 years in Canadian real estate, 101% in 3 years in Canadian entertainment. Canadian Edge has a 113% total return. We have over a dozen dividends that yield over 7%, including 3 high-yield picks that earn 9.8%, 10.5%, and 13.4%. All of the Canadian Edge picks are evaluated according to a 6-point safety rating system.
2 of the 6 criteria are based on the payout ratio. 2 of the 6 are based on debt, and 1 of the 6 is based on the nature of the business. And the final criteria is based on dividend cut, on whether the company has been able to maintain its distribution over the past 5 years.
Canadian Edge is the perfect addition to your personal finance subscription. It will bring you additional detail on the portfolio transforming power of Canada. Canada is the perfect place to invest. The lowest inflation of any major country. The #1 banking system in the world. Abundant natural resources. A major exporter of oil and natural gas. And Canada is strong through the hard times. So come take a look around. I encourage you to try Canadian Edge for yourself because we have a lot of wonderful things to show you. There's no risk to giving it a try. You can always get a refund if it's not for you. Click the link below to find out more. Also, don't forget to download your current issue of Personal Finance. Thank you so much for watching, and we'll see you on October 23rd for the next executive summary of Personal Finance.